Today's topic is about stock investments, particularly focusing on how young adults approach it. It seems many people are jumping into stocks and funds, thinking it's the right way to save and grow their money. But is that really the best approach?
That's an interesting question. A lot of people assume that investing in stocks is a surefire way to grow wealth, but there's a deeper principle at play. Just because you can make some money in the short term doesn't mean it's the right investment strategy for long-term stability.
Absolutely. In fact, if you look back at history, there were times when investing was done quite differently. There were periods when people were even collecting scrap metal and sending it to steel mills. It was a crucial job for the economy back then, but today it's just not the same thing. The labor costs wouldn't even justify it now.
Exactly. It's a great example of how times change and how investments must adapt. But even in modern times, the idea of investing for the future remains, and people think that investing in stocks will always bring in profits. However, there's a deeper principle to consider when it comes to stock investment.
Right? If you're looking to invest in stocks, you have to think of yourself as a business partner, not just a passive investor. The goal is to find a company that's growing and align yourself with that growth. You can't just throw money in and expect a windfall. You need to understand the company and its potential.
That's an important point. So instead of investing blindly, you're suggesting that we treat stock investments like a partnership, where we invest with the mindset of helping a company grow.
Yes, exactly. And if you can approach it that way, then the money you're putting in is part of your savings. It's not just about quick profits. And remember, you can always sell your investment when you need to.
So it's about finding a balance and not going all in. What happens if someone invests too much at once?
Well, that's where greed comes into play. If you pour too much into stocks, the result is often failure. You might think you're making money at first, but once you get greedy, things tend to fall apart. The law of grand nature teaches us that the moment you let greed take over, you'll lose.
And it's not just about how much you invest, but how you manage what you invest, right?
Exactly. If you make a profit, don't just invest all of it. Keep 30% of the profit aside and invest only that. The idea is that if you stay disciplined, your investments won't suffer. The other 70% is still your base, your stability.
That sounds like a smart strategy. By investing just a portion of your profit, you avoid getting carried away by greed. It's all about setting limits to prevent emotional decisions from sabotaging your investments.
Exactly. And if you think about it, the same principle applies in other areas of life, like losing weight. If you lose 30% of your weight, it's easier to maintain, but if you lose 70%, it's harder to keep it off. The same applies to investments. If you don't cross the 30% line, you can grow your assets without risking everything. Um,
It's amazing how universal these principles are. They apply not just to investing, but to many aspects of life, like relationships and work. If you overdo it, you might burn out.
That's right. And it's not just about avoiding losses, it's about ensuring sustainable growth. Focusing too much on the stock market can divert your attention from your main work, which could affect your overall success.
So, the key takeaway here is to avoid being overly greedy, manage your investments wisely, and follow the laws of grand nature to make sure you're making decisions that will lead to long-term growth, not short-term gains.
Exactly. And for those looking to invest, think of it less as a way to get rich quickly and more as a way to support companies that have growth potential. It's not just about making money, it's about contributing to something bigger while ensuring your own financial stability.
That's a great perspective. It seems the real wisdom lies in knowing when to stop and how to balance risk with stability.
And as we look to the future, this approach can help individuals and companies grow together, aligning with the law of grand nature. It's all about finding harmony in the investment process.
This was a great discussion, and there's definitely a lot more to explore in the future. I'm sure our listeners will have many thoughts after hearing this.
Absolutely. And as we dive deeper into the topic of investment, let's keep reflecting on these principles to guide our actions. It's a journey worth taking.
Definitely. Looking forward to more insightful discussions on this topic.